Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, today's date, Monday, May 19th, 2014. Markets are trading flat to slightly higher. It's interesting because today what we're seeing is the NASDAQ leading the charge up 0.7%, while the Dow is barely positive, just up 4 points. So you're seeing this rotation. We started to see it a little bit last week on a couple days where the NASDAQ and the tech sector would start to lead. You saw stocks like Facebook and LinkedIn taking charge, while Dow stocks like Chevron were lagging substantially. And if you take a look at Chevron today, same thing again. And typing in CVX, so while the markets are green across the board, even though the Dow is lagging, Chevron is down 20 cents on the day, 22 cents. And then if you take a look at Facebook here, up $1.12 at the highs of the day. If you take a look at LinkedIn, LNKD, up over $4 on the day. So you can see that little bit of rotation. And what this is, again, folks, is a rotation of capital out of safety to more risk. So essentially what this is telling you is that investors are feeling a little bit more confident that the markets are going to head higher and they're taking on more risk. All right. So that's what we have going on here on the charts. If we go back to the SPY, a couple little things I want to point out. Number one, the market from Friday's rally, nice push up. We had a small gap down today, which recovered, and we continued on this trend. See the trend? How you pushed up here, and then this choppy sideways action just continued up until this pivot high. What was this pivot high? Well, if I zoom out, you can see this was this little pivot low right here, gap window, and the 200 moving average. So in terms of looking at resistance, here, this is a pretty important level, and that's why the market stalled there, at least in the short term. All right, if we push up through that later today or tomorrow, the ultimate decision or where this market will ultimately end should be right here at gap fill. There's a little bit of a level below that, but honestly, at this stage of the game, you could erase that level and just look to gap fill. So again, short-term gap fill is going to be your next resistance. Now, a couple things I want to note here about the intraday SPY chart. If we zoom in, this downward move with this sideways consolidation pattern is known as a bear flag, or in spirit of bear flag pattern. Okay, so again, downward move, inside bar consolidation, bearish pattern. Now, normally if we had more volume and it wasn't kind of lunchtime, late lunch, mid-afternoon, I would say this has a good chance of playing out to the downside. But because of the volume in the market, and look at how low the volume is. I mean, this is a great example. You can barely see the candles as compared to earlier today and on Friday afternoon right here. Look at how small those candles are. So that makes it very tough for a bearish pattern to play out. Bullish patterns, it's actually a benefit. But bearish patterns, it makes it have a lot of trouble playing out. So even though you see this bearish pattern here, the odds of it actually playing out are probably like 50-50 at best. At best. Maybe even, 40-60 or something like that along the lower end, less than half chance of playing out in this market environment. All right, a couple other things to go over here as we look at these charts. And again, this is the intraday SPY, which mirrors the S&P 500. If we zoom out, I think it's important to kind of recognize the choppy pattern you've been in. So really, if you zoom out as far as you can go here on this chart, you can just see up, down, up, down, up, down, up, down, up. And so again, the market is telling us that it's kind of at this pivotal range where it's deciding on which direction it's going to be making the next big move in. Okay, so is it going to be a big breakout to the upside? Well, it looked like early last week we had that, and then it failed. So it kind of said, no, not so fast. Well, now we flushed down late last week, and then it's recovered. So it's not that direction either yet. So we need to kind of follow things in the short term and look for that bigger move, and it should actually continue for a substantial amount of time. Now, according to our calculations, as we come into the Memorial Day weekend, you're going to continue to see neutral, possibly even a little bit of small upside, but we think you're going to generally trade in this range. So really, even though they could float the markets up a little, I don't think there's much upside to it. I think that the risk will be that after the holiday weekend, you could see another decent little drop in the markets. Not a big one. The big one doesn't come till after July 4th, but at least in the short term, again, neutral-ish, maybe a slight bit of upside, and then after the holiday weekend, look for some selling pressure to come in. All right, couple big deals out there. Take a look at AstraZeneca, AZN today. AZN rejecting the $120 billion final offer from Pfizer, and look at that stock just getting hammered today. And again, if I'm a shareholder of AZN, and I'm not, but if I was, I'd be pretty annoyed at the fact that they rejected that offer, because if you're still holding the stock and you didn't know to sell it up here, you just took a nice 11.5% drop on your share price. So interesting to watch this. Now, interestingly enough, if you take a look, here's a little pivot support, and there's a little bit of a gap fill right here, plus the 50 MA. So there's actually a lot of support right down here. I think unless the market really starts selling, you're going to see this stock hover here and maybe start to float back up if any sort of kind of rumors circulate that there might be a deal in the works again. Maybe AstraZeneca, after this drop in share price, starts to reconsider the offer. Maybe they sweeten it just a little bit. Maybe Pfizer sweetens it just a little bit. So, it's one of those things where at least a majority of the upside is now out of the stock. And now we start looking for a potential entry on a long play. There's a small chance it gets down to this area, but I don't even think it gets down here in the short term unless the market really tanks. I would say anything kind of around if you could get some sort of sell-off tomorrow to about the 68.50, 68.60 level, I think that's where you actually maybe tuck just a small position away, and you hope for a rumor of the deal being back on the table, coming back, and you can see this thing right back up to $80, $85 very, very quickly. All right, another deal out there was AT&T buying DirecTV. I mean, assuming it gets past regulators. Now, some people are saying, well, how come DirecTV's down on the day when they were bought out for $48.5 billion on the deal-making side? And I think the key here is you have to understand that when deals are made, you got to look at the fine print, right? It's just like a credit card deal, whatever. Anything you end up signing your name to or being involved in, you have to know the details. And one of the details is, number one, I think that regulators may not let this go through. There's also another deal that says that if DirecTV does not renew the football package, which gives every game across the spectrum for football games on their DirecTV, then AT&T can back out of this deal with no breakup cost. And at the end of this football season, that's when DirecTV would renew that agreement if they can renew it. So, I mean, there's some nuances here that make this. That's why the stock's trading down, by the way, because of that breakup deal where they can get AT&T can get out of it, and also because you have to see if regulators actually are okay with these two big boys merging together. So, that's why a lot of people ask me today, well, how come AT&T's down? Well, you got to look at the fine print. I mean, just look at the fine print. It's pretty obvious once you see what the fine print's telling you on these type of things. All right, JP Morgan Chase today up about 35 cents. This stock continues to be under a lot of pressure on the daily. I mean, even though this is bouncing today, this is not a very clean, crisp daily chart, and makes me think that, again, you could be looking at some downside pressure. All right, and again, the fact that this stock has performed so badly, many people have asked me, well, why are the financials in such bad shape? And the answer is just simple. I mean, look at interest rates. Everyone expected interest rates to run up, and that's why the stock is trading up here. And interest rates are good, right, because they're loaning out money. Big banks loaning out lots of money, and they're getting a return on that money based on the interest rate. Well, the fact is interest rates have fallen, and fallen pretty precipitously to about 2.5 on the 10-year. And that's why this is basically down. Also, if the 10-year is falling, it tells us that the economy is not strong like the Federal Reserve has been kind of telling us it would be for quite some time. Now, granted, the Federal Reserve is still trying to get out of the QE, which tells you that they know it's not working anymore. Because there's no, I mean, listen, the economy's not, it's not growing, but it's growing at literally like 1% on GDP or something for the year, which is essentially no growth, neutral growth. But the Fed has been continuing to tell you, oh, we see it coming back, and you don't see it in the numbers, and you might say, well, why? Was the Fed lying to us? And the answer is, yeah, they kind of are, but they realize that they have to say that so they can withdraw the QE and they can stop printing the money, because they know at this stage the money's not doing anything. $45 billion a month, which is what they're printing, it's not doing anything. It's not. I mean, if they printed $4 trillion over the last 5 years and it didn't do anything really, well, what do you think another $45 billion every month is going to do as they withdraw a little bit more and a little bit more? It's nothing. And they know they need to just stop printing that money, but they can't do it all at once. They have to do it slowly. They have to tell the markets that there's growth, and this is how they can kind of soothe the fears, at least in the short term. until more reality sets in later on. So these little things are very important for us to understand, folks. And again, just going through a couple other charts here. Baidu today up about 3 points. Nice move on Baidu. Google, let's take a look at Google. Yeah, Google small bounce today up about 6. Apple today also having a decent move up about $9. New highs here. I've been telling you guys in this video that I suspected Apple's going to go to 615 to 620, and I still am on that camp. I mean, if you look at this move, consolidation, 20 MA sloping up, and there it goes. Moves to the upside. So that looks like to be a good prediction on that. And again, as I just kind of look here, I'm still short Chevron. That's looking great, in the money nicely on that now. And a lot of these other stocks that I've picked up on the short side over the last few days and last week, if you guys have been a member, you've gotten those trade alerts live. They're all looking very good. I love the fact that this market is doing what it's doing, and the shorts that we have are performing nicely. Little example of that would be TSN. TSN, great bearish pattern, flat on the day, even though the markets are hovering to the upside as well. And also BRKB, I shorted this late last week, and it's down 10 more cents today. We're in the money on this one as well. So that's what you want to look for. You've hit a good short if when the markets are slightly green or green, especially like the NASDAQ having a nice gain today, if you can have some good flattish or even in the money days on your shorts right now. And I have some longs out there and some shorts, but a majority of shorts is I do favor the markets to the downside. But the key is to really analyze and pick up chart patterns that have that signal that they're going to make you money even if the markets are neutral to positive, especially going into a holiday weekend. All right, come join this 7-day free trial here at InTheMoneyStocks.com, folks. That 7-day free trial to the Research Center. That's the Research Center at InTheMoneyStocks.com. Get the live alerts as we take trades, and we give you entry, exit, stops, targets, you name it. You get everything here at InTheMoneyStocks.com. Take care.